Carl and Sarah, welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. Front and center this hour, the record run. The NASDAQ and the S&P 500 hitting fresh all-time highs as bank earnings roll in and Nvidia scores a major win in China. Our investment committee is standing by to break everything down. Joining me for this hour, we have Josh Brown, Stephanie Link, Jim Leventhal, and Jason Snipe. But first, a quick check on the markets right now. You can see the markets, when we look at the S&P, basically flat, just fractionally higher. The Dow pulling back about 0.5%. It's really the NASDAQ moving higher, up about 0.75%. Following that Nvidia news, and with that, Josh, I want to come over to you. The Nvidia news that Nvidia says it's getting assurances from the White House it can once again sell its H20 chips in China. A lot of people see that as a broader tailwind for the quote-unquote AI trade. How are you viewing it?
Oh, look, Nvidia obviously has had this overhang when it comes to the Chinese situation. It's not new. People that have been invested in the stock have understood that it's not entirely clear that they'll be able to operate in China the way they had been. And obviously, when news like this comes along, there's an exhalation. People feel better. You could see today the stock looks unbelievable. Yet again, up 4%, new all-time record high. Over the last couple of weeks, this thing has just gone parabolic once again. It's really, really tough to say, even now at this advanced date, given everything that's happened in AI, everything that's happened with some of the other players, it's really hard to say that Nvidia is not still in every bit as competitive a position as they've ever been. They just, they're exactly in the space that you'd want to be if you're an Nvidia shareholder. That said, this is a really tough stock to buy today. So I feel bad for people that are not in it or that got out of it at much lower prices and now are looking at 171 staring them right in the face. But that's the reality. It's a really tough stock to pull the trigger on to the long side, given how much it's run up just in the last couple of weeks.
But Josh, doesn't this unlock, a new set of revenues? Maybe not for this quarter. This quarter is winding down, but for the next fiscal year and beyond, doesn't it unlock the idea that we're going to see Chinese technology built on Nvidia's infrastructure?
Yeah, I think the cynic in me would say, don't worry about China getting access to GPUs because they can get them from other countries in Asia, and there's probably some truth to that. And I don't know whether or not analysts have that in their numbers already, but absolutely there's a case to be made that you could see a round of estimate lifts happening between now and when they report. Remember, Frank, Nvidia is a late reporter. They're the last of the large cap tech to report traditionally, and there's a lot of time between now and then, even though we're in earnings season now. The thing that's most important to Nvidia, though, more so than this new development with selling in China, is what the hyperscalers say in their reports. And those reports are going to come early. If you look at the way Nvidia stock traded around the reports of Microsoft and Amazon and Alphabet last quarter, you realize that's the real catalyst here. These Meta, these companies coming out and saying not only are they committed to the spends that they've already announced, but in some cases, we've heard about increased spending. Nvidia doesn't get all of it, but they get a lot of it. So that's to me, that's really the deciding factor on how this name will trade for the rest of the summer. What do their biggest customers have to say about the demand environment?
All right. With that, also, Melius Research actually upgrading Nvidia from 205 up to 235. Jim and Jason, I want to come over to you guys. Jim, you first. What's your take on this Nvidia news when it comes to this company? And is it a read into any other tech plays? I'm just looking at the moves right now. I'm seeing ASML up about 1.5%, Taiwan Semi up over 3%, Super Micro up over 7%.
AMD. I mean, the whole semi space is up on this news. And I think just very simply, this is the sort of news that you allow to ride. Obviously, we see Nvidia up 4%. I wouldn't be surprised if it continues to go higher. And some of the Nvidia adjacent names, CoreWeave's up very big today, as you can see. And I think what you do here is this is a time in the markets, particularly for the AI semi trade, where you just don't worry about valuation. And that's not a side hand way of saying, oh, I think Nvidia is overexpensive. It's just a time that this news needs to be digested by the market. It probably crescendos for a few more days. After that, this does seem like a market to me that has run run very far, very fast. And I wouldn't be surprised if, now looking at the market overall, if you at least got a pause, at least got maybe a little bit of a pullback just from buyers being exhausted.
All right, as I mentioned, Supermicro's up. Actually, Cisco's pulling back a bit. Jason Snipe, I want to come over to you, just kind of get your take again on this AI play. Surprised at all to see a name like Cisco, routers, servers, and things like that actually pulling back. I was checking the charts. Dell pretty much flat right now. Surprised to see we're not seeing a broader impact?
Well, not really, Scott. I mean, Frank, I'm sorry about that. But so for me, I think as it relates, one of the things that we haven't spoke about is Google's huge investment, $25 billion in the PJM Intercontinental, which is the largest electrical grid in the country. Right. Covers the Midwest, covers the Mid-Atlantic, parts of the South as well. So for me, there's absolutely we're at a deficit in terms of the infrastructure build out for electricity and what data centers are going to need. So that's hence a lot of the move in these infrastructure type plays. And obviously the industrial names have grown a lot so far this year. But I think this is a trade that you need to continue to keep on.
Specifically Nvidia and chips, or are you saying the infrastructure, like second derivative plays like Eaton as
I think both. I think both can work. And even as it relates to Nvidia, I'm thinking about, obviously the news that we heard about earlier, China was an $8 billion hit in this quarter, right? They're not going to catch up all of that revenue this particular quarter, but going through the rest of the year, being able to now sell these H20s, I think is a major catalyst for the stock going forward.
Jim?
I'm probably talking about it too much, but since you brought up Cisco, I will remark that it's had a heck of a run. I mean, it's up 46% over the last 12 months, still very attractively priced. So I do think it's really been about a week that it's kind of sputtered a little bit, but that's after a solid run from about $55 a share 2 months ago to now about $68 a share. Estimates are going up. It's priced at about 17 times forward earnings and getting a lot of AI orders. So there are, in addition to Nvidia, which I think is attractively priced, but if you're worried about that price, there are names like Cisco out there.
There's the names like Cisco out there. Josh, I'm going to come back over to you after we heard from the Commerce Secretary, also talking, quite in detail about power, the needs for power, and the fact that he believes that there's a kind of a market for power players, whether they go to red state or blue state, they're going to try to seek the most attractive offer. Any thoughts about the energy sector in particular on the back of those comments?
I have an energy position. The sector is not acting well. I think these are very cheap stocks. A lot of people who have avoided the sector would say cheap for a reason. The purpose from my perspective, the purpose of owning oil and gas stocks is not necessarily that you're a bull on oil and gas per se. It's that you think these companies' profits will translate into increased shareholder value, regardless of whether or not the prices of energy break out to the upside or just remain in the same place. So that's kind of where I am. I don't forecast crude oil. I don't have a price target for natural gas. I just think these companies are making too much money to be trading at the valuation they are, and they'll get rediscovered. I have no way of knowing the timetable. The better stocks within energy are the energy transmission names and some of the select utilities that are highly involved in powering AI and are part of this build out of the new cloud infrastructure. Those stocks have already worked really well. I don't have any one of them in particular that I'm, in or about to buy. But it has been a really good place for investors to be within the broader idea of energy.
All right, let's switch gears a bit and focus on big tech right now. As Snipe just mentioned, Alphabet making an announcement they're going to spend $25 billion on data centers in the Mid-Atlantic area. Link, I want to come over to you. Another name spending quite a bit on AI infrastructure, which is Meta. Upgrade today from Bank of America going from 765 to 775. Just your thoughts on the stock and this general trend of this AI build-out.
I'm a huge bull on Meta. This is a company that is just in the driver's seat across the board in all of their businesses. They're growing earnings, or revenues rather, 16%, earnings at 25%. They've got an enormous free cash flow. They're going to spend $70 billion on CapEx, on all the stuff we were just talking about. And like every day, they keep on buying a person, or they're buying a minority stake in AI in a joint venture. So I love what they're doing in terms terms of where they're using their dollars, because obviously we're all believers in AI. We're all believers in all the things that we were just talking about and all the various different segments, and they're going to be a player. And so to me, you want to just stay long. It's not even all that expensive. It's about 17 times EBITDA. The average is about 18 times. So you're not really that expensive, but it's certainly a name that is going to benefit going forward. Numbers are absolutely going to go higher after the report.
So one other name to get to, Microsoft hitting a new all-time high today, also getting an upgrade from Bank of America ahead of earnings, 585 to 600. I don't know how meaningful price targets are to you, Jimmy. You own this name. Just what's your thought on this company as we start to see this AI race really accelerate when I think some people thought it might have been hitting a bit of a pause?
Yeah, well, I would say I don't think there's anything specifically newsworthy about Microsoft specifically today. So this is an example of when the trend gets going, it is your friend, just ride it. I can't tell you, none of us on the panel today can tell you how long it's going to go, but enjoy it while it continues. And by no means am I saying that Microsoft has some trapdoor underneath that's going to open and the stock's going to go down to $400 a share. That's not my point. It may be a little bit pricey in the high 30s as a forward multiple. It may give some of that back if you get some seasonality in August and September. But this is the highest quality of high quality companies. It's a stock that you want to own for the long term. I might not buy it at exactly this price.
Well, can I ask you a question? You mentioned that you trimmed Oracle. This is a stock, you're looking at the chart right there from the April low. Big run up over the last 3 months, up 30%. Why isn't this the same strategy? Why not trim a bit off this?
Because I don't want to trim everything. You know, it's not a moment where I want to build up some huge cash reserve. I was talking to you about this before the show. I would like to have 7 to 10% of cash going into this earnings season to be able to pick up some names that will indubitably get hit for the wrong reasons during earnings season. But I don't want to go out and trim Oracle, Microsoft, Nvidia, all of these stocks, Amazon, Alphabet. I want to let the winners run for the most part. Oracle, nothing personal. It's had one heck of a run. It's basically tripled in the 2.5 years that I've owned it. So that was a very ripe candidate.
All right, Snap, I want to give you a quick word. We got to get out of here. But Microsoft, looking at it, trading at 35 times forward earnings. Your thought?
Yeah, so for me, as it relates to Microsoft, I mean, clearly Azure is a centerpiece for the stock. I mean, it's up 34% year over year, 17% of which is AI-related, AI-driven. So it just kind of relates back to the story we were talking about in terms of infrastructure and AI build and data center build. You know, so I continue to like the stock's up 20% year to date, and they guide to the high end. You know, in the last quarter. So I continue to like this one.
All right. With Josh Brown's best stocks in the market, Josh, you got two names that you want to highlight ahead of earnings this week. We're talking Netflix and Interactive Brokers. Let's start with Netflix.
Okay. So Netflix is Thursday after the market closed. The street's looking for $11 billion. That would be up 15.5% year over year. On the revenue side, on earnings, $7.08. We have, the earnings number would be up 15.5% year over year. We've been writing about the stock positively all spring, all summer in the best stocks column that we do for CNBC Pro, and I own the stock personally. I probably would not be a buyer ahead of this number. It's not that I don't think it will be good. It's that I think it's very possible you got to sell the news reaction here, given how good the price action has already been. I'm planning to stay long. This stock is up 45% year over year. So I just think like part of the equation in best stocks in the market parlance is to just be aware of what the momentum is here and how much of that news flow might already be priced in. So if I'm not in the stock, I'm a wait and see and maybe trade the reaction. If Netflix, for whatever reason, does a great number, but the market's not that excited about it because they already knew it would be a great number, that might be a great opportunity to be a buyer if you're not already long. Interactive Brokers is a different setup. I think this is a potential breakout in progress. We don't know yet, of course. The quarter is going to be really important here. But for me, I would take this risk going into the print. Look at the way Robinhood has been trading. Understand how excited the investor class is about the markets. And it's pretty easy to see a scenario where IBKR puts up another beat on new accounts opened. That's like, other than the earnings of the revenue, that's really the most important metric. The stock itself is emerging from a cup and handle pattern. You could see it clearly when you look at a one-year chart. RSI is 71. Some would say that's a little overbought. I don't see it that way. I think new highs should be accompanied by high momentum. So I like it here despite the fact that it's been going up. And the most important thing to understand is this is 55% retail, the commission mix here. So if you think Robinhood is up for the right reasons, given the momentum amongst retail traders, you should be able to extrapolate that and see a better than expected quarter coming out of Interactive Brokers as well.
All right, Josh's best stocks in the market. We're talking Interactive Brokers and Netflix. Jason, I want to come over to you. You own Netflix as well. What do you think about Josh's thesis and the stock, just from your own point of view?
Yeah, I mean, I couldn't agree more. Obviously, the stock has run a ton so far this year, up 40+% year to date. They had a great quarter last quarter. I think one of the things that I'm following, I think password sharing and ad-supported tier are behind them in terms of catalysts. I'm looking towards operating income. They also plan on spending $18 billion in CapEx, for content spend this year. So let's see how that plays out, through the second half of this year. But I continue to like the stock and I stay long.
All right, Netflix shares pulling back today, down about 0.5%. Coming up next on Halftime, we have our calls of the day. We'll be right back. Also want to go to JP Morgan, upgrading Otis Worldwide to overweight. Josh, you own this one.
Yeah, look, this is a name that if you look at the impact of tariffs during the last trade war in 2018, it was de minimis. It cost them a few $1 million. The thing that people don't understand about Otis, yes, they know they make elevators. The real business here is maintenance. Maintenance is not optional. It's not price sensitive. If buildings install elevators, those elevators must be maintained by law. And that's where the net income growth is coming from in the Otis story. It's where the profits are. So I'm long the stock. It's been on the best stocks in the market list. I think it punches higher from here, and happy to be long.
All right, I want to move on to American Express, downgraded to neutral at Maness. Jason, you own this one.
Yeah, so AXP is up close to 6% so far this year. I think net interest income growth has been a good story for them in years past. Cross-border travel has obviously slowed some. Credit quality is still strong, but I think a little bit of the concern for me is a rising cost of rewards. And you know who they cater to, that surging millennial or older millennials. So continue to like this stock. I think the consumer is still relatively healthy here, so I'll continue to own it.
All right, right now pulling back about 2.5%. Coming up, a new partnership for Uber. The committee's take coming up straight ahead. And welcome back to Halftime. Uber is partnering with Chinese tech giant Baidu to bring the company's autonomous vehicles to Uber's platform outside the U.S. and in mainland China. Nearly everyone on the show today owns Uber, but Josh, we're going to kick things off with you.
Look, the Uber strategy, in my view, is the strategy that's going to win autonomous taxi. Period. End of story. If you're the consumer and you want to be picked up from somewhere, the three things that you care about the most: ease of use of the app, how quickly can the driver get there, and is it a reasonable cost? If you're doing standalone autonomous, it's going to be a really long time before you could be the fastest car to arrive. There's just not enough of them on the roads. Uber has said, we will work with anyone that wants to put a network of autonomous cars on the road. And the reason why these companies want to work with Uber, including Baidu, is because it's instant ridership. This is the thing I try to explain to people who don't know anything. When you think about what the typical ride is in the United States, it's 5 miles and it's $12. And the typical car is doing 23 of those trips a day. Right now, the cars that, let's say, Waymo uses, I think it costs them $150,000 per car. Let's assume it's Alphabet. They will find a way to get that price lower. Let's say they get it to $50,000. Even still, how much time and how many days, how many rides do you need for a break even on that? So there will be very few standalone autonomous networks. Waymo is probably going to be the biggest one. Uber is going to work with everybody: Volkswagen, May Mobility, Pony AI, and Waymo. And I think they're going to win with that strategy of inclusiveness rather than just our own cars. In the meanwhile, while we wait for more autonomous rides, they still have millions of human drivers ready to get you whenever you need to be gotten.
Link, your take on this new partnership?
Well, obviously, it is very powerful. The AV market right now today, the total addressable market is $1.5 billion. It's headed to $13 billion by 2030. That's a 35% CAGR. So the fact that they're going to be one of a few in this massively growing end market is positive. But I'm with Josh. I mean, like, we have a long way to go, and they still have a great business in ride sharing, in food delivery, in new products, making their apps more easy, accessible, and that sort of thing. So I like it a lot. I think we're in the early innings. It's up 50% year to date, though. I just wouldn't chase it at this moment.
All right, take a look at Uber shares pulling back about 1% right now. Stay with us. Final trades, they're coming up on halftime. On halftime with final trades, Steph Link, you're up first.
Buy Wells Fargo on the weakness.
Josh Brown.
Toast breaking out, new 52-week high. What's up?
Jason Snipe.
Emerson Electric, significant demand for industrial.
Jim Lebenthal with the last word.
Walt Disney Company, it's pulled back about 4% from a recent high over the last week and a half, but I think that sets it up for the next leg higher.
All right, with that, we're taking a look at the markets very quickly before we let you go over to the exchange. Kind of a mixed picture right now, actually. Seeing the Dow hit, I believe, its lows of today, down about 1/4%. The NASDAQ up almost 0.5%. That does it for halftime. The exchange starts.
That was Josh Brown and guests on the halftime report earlier today. It's Tuesday, July 15th. It is currently 5:55 p.m. as I'm recording this Eastern time. Markets closed. You can see that the Dow was down 0.98%. NASDAQ was up 0.18. S&P 500 down 0.40. Russell 2000 down quite a bit, down 1.96%. In this video, here's what we're going to do. We're going to cover a number of stocks. We're going to take a look at the indice or index ETFs, all right, including the European one. We're going to look at about 11 of the stocks and ETFs that were discussed on the show, including Nvidia, which happens to be one of my positions. Doing a special here for you guys. And then also Tesla, Apple, and a couple of requests from our members. This is a stock you'll definitely want to check out, the QS. I mean, it is this. We're going to do the technicals on this one, and I think you're going to, enjoy this video. So let's get started first with the map, the heat map. What is that? It's going to show us how the individual stocks did in the S&P 500. All right, so today, the one-day performance is what we're looking at. Nvidia was up 4.04. Broadcom was up. AMD, Micron. Not a whole lot, right? Some semiconductor stocks that you see right there. Citigroup was up. Microsoft, Apple, Amazon, Google slightly up. Tesla down 1.93. Home Depot down 3.1. And Lowe's was down 3.32. Meta was down. A lot of the healthcare stocks were in the red here. A lot of the financials were in the red. A lot of the energy stocks and real estate and utilities and basic materials. The majority of industrials were down today. Consumer defensives were down. It was not a good day in the market, obviously. But if we look at the 1 week performance, let's take a look at that. It's a little better. Okay, so you can see that, it's mostly the large cap stocks that are doing really well, right? The big companies like Tesla, Amazon, Google, that were up for the week so far. Industrials, utilities are okay. Here's the 1 month performance. All right, a little better. You can see Visa and MasterCard are down this month, or at least for the last 30 days. And Eli Lilly, some of the healthcare stocks down. Healthcare plans like UNH down 8.41%. What about what's going on in the world right now? Let's take a look at that. That's interesting. Here's a 1 month performance for the world. FinViz Elite, we can look that up, and we can see per country how the countries are doing. And you can see the Canadian stocks are pretty mixed. Cayman Islands there. TSM is up 9.99%. That's the ticker symbol. It's a mix, basically. How about the exchange traded funds? So as you can see for the month, it's pretty much, there's a lot of bullishness here, but again, today was a pretty bearish day overall, even for the ETFs, except for some of the technology stocks like XLK were up a little bit. The inverse ETFs did pretty well today. SMH was up 1.92. That's the semiconductor ETF. And some of the Chinese stocks there, Chinese ETFs like FXI, YINN. Emerging markets were up a little bit. All right, so let's go ahead and take a look now at let's take a look at the indexes, right? So we'll start off with the SPY first. And, today was actually created a bearish engulfing pattern, which is not good. It also closed under the Tenkan-sen today for the first time in a while. So you can see that double candle pattern right there. If we look at here at the candlestick, all right, pattern reference sheet, what is a bearish double candle pattern that looks like a bearish engulfing? It's this right here. Small bullish candle followed by a larger red candle. And so that is bearish. And so there's a higher probability that we'll see a continuation to the downside tomorrow. It also happened on higher volume. So just be cautious right now based on that. This is just a higher probability. It doesn't mean it's definitely going to happen. Obviously, nothing is guaranteed in the markets, right? How about the QQQ ETF? Well, that looks a little stronger. It did gap up, and then it spent the rest of the day just dropping, right? So we can see that again on a 5-minute chart. Let me just move this a little bit to the side. If we switch it to a 5-minute chart, you can see that gap up right there. And then it just, the rest of the day from that high there, it just kept on dropping, right? Dow Jones on the 5-minute, not looking good either. Here's a daily chart. You can see that it actually, this is the third, well, I wouldn't say it's the third day because right there it just barely was above the Tenkan-sen, but it did not, it was not a conclusive break above Tenkan-sen right there. So today it actually gapped, didn't gap down, it just closed down below the prior day's close and on high volume. It might be just a short-lived little pullback, could be more extended. We'll find out as time progresses. Here's the Russell 2000, another bearish engulfing pattern. Right there, those two candles. Right, that's a very, it's as plain as day. You can't miss that. And look at that high volume bar at the bottom there. It's higher than, it's about twice the volume of the prior day. Okay, so that's also important. The VIX was up a little bit, spiked a little, up 1.05%, not really that much. It's still under the Ichimoku cloud. We're using the Ichimoku indicator. We want to keep the VIX at low levels, like around 17 to 20 or so. As long as it's in these levels here, the market tends to do pretty well. It's when we get the spikes, and there's fear in the market that you'll see these big gaps and jumps in the VIX, which of course leads to a decline in the market too. FEZ is the Euro Stoxx 50 ETF. This one was down 1.25% also, kind of creating a bit of a bearish engulfing pattern, but it's very close now to the level of support, the Kijinsen, which is the 26 period, all right? That red line right there. It takes the midpoint of the last 26 periods and projects it, plots it. That's why, because it's taking the midpoint, that's why it can flatten out like you see right there. It's not like a typical moving average, which typically looks at a closing price, of the last 26 periods. If you were looking at a 26-day moving average, for example, you'd be looking at just the closing prices. Here, we're looking at the midpoint, and that gives us, I think, a better, sort of a, I think, in my opinion, it's just a better plot in the direction of the trend itself, because it's the average. It takes the highs, the lows, you divide that by 2, and that's how you get those moving averages. What else? Let's take a look at the stocks that they talked about on the show. Now, I don't cover all of the stocks because some of those stocks, the majority of them, some of them, the ones that you're not seeing here are probably in my portfolio. And so, but I did bring up Nvidia, and we're going to look at that in a second here. So let's look at Cisco first. Cisco has pulled back a little bit, and as you can see here, it got under the Tenkan-sen. It's now finding support at the Kijinsen. It's very possible that we'll see a bounce, okay? As long as the market continues moving up. But right now, would I be adding here? No, okay? We need to get at least above that 9-period moving average to get a little bit more confirmation, just like we did back here after a pullback, and that led to a nice move, just like right here, okay? You can go back in time and look at, history repeats itself over and over and over and over again. And the way the market works, I mean, just look at Cisco over here in the past, okay? Let's take from August of 2024. There's a pullback, gets above the Tenkan-sen, you see the move. Same thing right there, see the move up. Right there, move up. Okay, it's like pretty consistent as far as the Tenkan-sen giving us nice buy signals, which is why I love using the Ichimoku indicator. And we don't have a buy signal here. So, IBKR. It's moved up a bit. It's a little bit extended now at these levels. It's starting to slow down. And as I've said in the past, if you see a spinning top after a move up, okay, after it's expanded to the upside, it's more than likely to be a reversal candle. You can see there's a gravestone doji right there, a couple more spinning tops right there. It's a sign of maybe exhaustion. You had one over here, for example, and it led to a small little drop. We'll see what happens with interactive brokers. Overall, though, what does interactive brokers look like? It's very bullish. If you look at the daily chart, it's been in a nice strong uptrend with price above the Ichimoku cloud, above the 200 rising day moving average, that dotted yellow line. If you look at the weekly chart, it's broken through some levels here now. It looks like, let me just confirm that. Maybe not. Oh, yes, it did break through that level. So let's see. High there is 59.13. Yeah, so 59.13 is, let me just go ahead and throw that in there as a reference point. And you can see that it's this week. Now, this is a weekly level. We're looking at a weekly chart here with interactive brokers. Okay. When you see this little W highlighted blue, that means that we're looking at a weekly. If it's daily, there it is. So we've gotten above that weekly level of resistance. I color these weekly levels blue. And usually the daily charts, on a daily resistance level, it would be red, a light red color. So on the weekly chart, we're above it. Now, it does not mean that this is finalized, this candle. This candle, by the end of this week, could certainly get right back under that 59.13 level. Has not closed above 59.13. So that's the key thing, right? So I'd wait until Friday before making a decision on interactive brokers if you're thinking about this one. That way you get confirmation that, yes, it's broken that prior resistance level here, all right, from February 14th, 2025. And that it's more than likely to expand to the upside. The fact that it did break above, though, is very bullish. Here it is 2 days in a row now. There's Monday, July 14th. Here we are on July 15th. So it's looking pretty good. You can see the ADX is moving up. The volume is increasing. The only thing is the candles aren't really super bullish. If you look at it, it's again, a spinning top. So I don't really trust those types of breakouts typically. What about Nvidia? Well, Nvidia's hitting all-time highs. This is one of the stocks that's in my portfolio that I share with members. Since they brought it up and it had such a big jump today, I thought I would talk about it a little bit. Added this position back on June 26th. And so when it broke through that 152.89 level, now I didn't actually add it right away on Wednesday, June 25th. I waited a day for it to get above the high there, and it's moved up a little over 9% since. You can see, though, today we've got a reversal candle. So there's a little bit of, that's kind of a warning system. And so, I don't know. I'm still holding the position. I want to see how the price action is tomorrow. The ADX is still very strong. You can see that's still moving up straight, high volume. And let's look at the weekly chart on this one too, real quick. Right? So look at that. On the weekly, it looks very bullish overall. So that's why it's important to use 2 time frames, folks. I do. Use the weekly, use the daily. Make sure that the weekly is giving you a bullish chart first. Okay? Always start off with a weekly when you're trying to determine if you want to add a position to a stock or ETF. If the weekly gives you the like a check mark, like, okay, yes, it's above prices, above the cloud, it's above the moving averages, yes. All right, then you can switch it. You can switch it down to the daily to see where it's at on the lower time frame. The weekly is the most important, in my opinion. All right, so, but the daily can give you a more efficient entry and a more efficient exit. So, anyway, I like Nvidia still. It's still in my portfolio. Jason Snipes' final trade was Oracle. I like Oracle too. Here it was up 2.48% today. Pulled back. Like I said, touched that. Stayed right there. Found that support right there on the Tankinson, the 9 period. Found it there. Found it there. And as long as it's above that, you're still good, basically. Here's a weekly chart. Still looking pretty bullish. The only thing I don't like on this weekly chart last week, if we look at this week ending July 11th, we had this like a shooting star type candle. A shooting star looks a little bit like this. Let me show you guys real quick. And again, it's bearish. Now, if you get this candle after a move up, right? So that's what this represents. So price has been moving up. You see it at the top, or a hanging man at the top, or a gravestone doji at the top of a move, or a spinning top, a bearish spinning top. You see this at the top of a move. Now, this can also be very neutral, as you see right here. Spinning tops right here can be neutral if they've been just kind of moving sideways. Over here, let me just show you these exact same candlesticks: the hanging man, the shooting star, and the gravestone doji and spinning top can also be bullish in a different context. So let's go back over here for a moment. And here it is. You can see that we've got, they call it a different name. Okay, it's a hammer. This would have been a shooting star, but here they call it an inverted hammer. Why? Because it's at the bottom. It's at the bottom of a decline. So that's actually bullish. Okay, when you see that same candle, here's a dragonfly doji. Okay, and here's the bullish spinning top. Again, they don't show the decline here, but if you get this type of candle after a drop, it's very bullish. So let's get back to what we're talking about. So we did get a reversal candle. What's happening right now is it's kind of moving sideways here. It has not, it hasn't broken really down. It was up 2.48% today. So that's a weekly chart we're looking at, and here's a daily. So I like Oracle still. TOST. I don't know. Josh Brown's final trade today. I don't think there's any breakouts happening here. The breakout will occur when price breaks above on this weekly level. Let me show you the weekly chart. Whoops. Get rid of that. The weekly level just throw that in there. Hold on one sec. Here we go. We got to look at last week's high right there, which ended on July 11th. And the high there was 46.57. Okay, so I'm going to go ahead and throw a little blue line there. And what I'll do is I'll also circle it so you know what candle I'm referring to. That candle right there. So you can see the high right there. That has not been taken out. And, if you look over here, I mean, in this little consolidation stage, see that little box? We've been stuck in that tight range. So there's no breakout yet on the weekly. We're talking about since May now, mid-May. All right. That's a long time that we've been stuck in here. But with that said, once we break through that 46.57, if it's conclusive, we get a nice candle similar to like this or something like that, for example, or like that, then yes, I think Toast will do quite well. The next level of resistance it will find once it breaks through that level would be this high up here. And let's measure. Let's get that measurement too, which will be the 69.93. We'll throw that on there. There we go. Happy little trend line right there, as Bob Ross would say. We'll circle that right there so you can see that. Now, why is that an important level, that 69.93? Because that will be a next target, right? Now, how far is it? Once we break through that 46.57, there's really no resistance in this space, right? This is all open territory. All right, think of it like that. And so once we reach the 69.93, you know how far that is? It's about 36.67% away from where we currently are. That's huge. All right, so I like that. Anyway, let's continue here. Baidu, they did talk about Baidu briefly. Baidu's inside the Ichimoku cloud right now. It has a bullish engulfing pattern, as you can see right there. That larger bullish candle is engulfing the smaller one. Would I be buying here? No, it's still inside the cloud. It's still under the 200-day moving average on the weekly chart. So no on that one. CRWV, Core Weave. This one looks pretty good on the weekly chart, right? So it's had this nice move. Now this is a initial public offering, March 28th. But, and it has moved quite a bit. It's moved up about 254.77% since the initial public offering IPO. But and it looks good in the weekly chart. I'm not going to lie. I like what I'm seeing here. It's creating what's called a bullish harami is forming. It's not complete yet. We still need to wait until Friday, but it's overall it's looking like it's forming that type of candle. Problem is, if you look at the daily chart, okay, we had a negative crossover right here. Faster moving average, the 9 period crossed under the slower one, and it's been in a decline. And it's been finding resistance at the Tenkan-sen. Why? Because once it breaks through that very important level, the green line, the 9 period, it's kind of hard to get through. You see that right there? All these candles. You know, they'll come up to it, come close, and they just can't, not enough power, not enough energy, not enough momentum to break through. But once we do have an event, maybe it's the earnings announcement. Okay, look at that downward trend line right there. Maybe it's the next earnings on August 13th. That will be the reason why you should consider this one. If it breaks through that trend line and it's on high volume, it's going to be something interesting to consider. Disney also dropping still. But this was Jim Lebenthal's final trade. They call him Farmer Jim. He's been recommending this since May 20th. He also recommended it on June 16th. He's recommended it on July 15th. Now, it has, since May 20th, it's moved up a little bit. You can see May 20th was this little candle right here. It's moved up 5.5%. So it's not a stock that's really, you're going to see a huge jump in. Even after a long period of time, like 2-3 months can go by and it'll only go up 5%. Why? Because of the price. Look at it. It's a $118, almost $119 stock. So it's a lower priced stocks that tend to have big jumps, but it's, you know, Disney is a good company overall. The weekly chart still looks pretty bullish. It's above the 200, even though the 200 is declining. It is above it. Price is above the Tenkan-sen, Kijun-sen, bullish cloud. All right, it did stall though. Ooh, that's interesting. So maybe I should draw a trend line right there too, because that's an important one. Let's throw that trend line in there. Right there. Happy little trend line. 123.74. The high there is 123.69, so we'll take the 123.74. There we go. And color blue. And you can see that price closed on that area right there. And then what happened? It actually stalled at that 123.74. And dropped. Came back to the next level of support, 118.63, based on that prior high. And so now what? Well, there's nothing to do here. I wouldn't be jumping into Disney. It's not something. It's got some layers of resistance right above here, including the 126.68. I'd hold off on Disney for now. Netflix. Steve Weiss's final trade back on July 14th, yesterday. It popped back above the Tenkan-sen here on the weekly, but the weekly candle is still forming. Here's the daily chart. All right, stalling under the Tenkan-sen. It also looks like we're going to get a negative crossover here. The green line looks like it's ready to drop under. It has not happened yet. They're converging, so not the time to be adding, basically. Otis. This is one of the stocks that Josh Brown likes. Otis Worldwide Corporation. Well, let's start off first with a weekly chart. Let's get an overall view of this stock on the long-term basis. And you'll see that it's stuck inside this very long extended consolidation area. Okay, it's been bouncing around between $106 and $90. Boom, boom, boom. Like a pinball, okay, in the pinball machine. So it's telling me that it's not ready yet, you know. If you'll also notice, you know, one of the cool things about this indicator, the Ichimoku, is you can kind of, without even looking at price itself, if you just look at the cloud itself, you'll notice these little crossovers taking place. If you see multiple crossovers, like the single span A, which is a light colored blue line crossing under the purple line, and then it comes back above, and then it's at the same level, and then it gets back under. If you just keep seeing some stuff like that, and this projects 26 periods into the future, if you see that, it's telling me that there's no clear direction. You know, neither the bulls nor bears are in control here, and you can tell also from the directional movement index. You know, the negative DI is above the positive DI still on the weekly chart. All right, so no on Otis, in my opinion. Energy, XLE, that was Shannon's final trade back on June 11th. So this one is still under the Ichimoku cloud. It's been stalling there. And so, again, this is kind of like, think of this as a filter, folks. That's the best way to describe it. It's like a filter. And you want to wait for it to get it. It doesn't necessarily, once price gets above the cloud, there's no guarantee that it's going to continue moving up. It's just like, you know, especially if you've got some resistance levels in the past, like over here, right? So it popped above there, but then it had that resistance right there. But my point is that, and we also have a lower low here from the prior low. So energy is not looking that great here, at least this ETF, XLE. There may be some strong stocks within it, this ETF, but not something I'd be thinking about adding here. Okay, let's look at Tesla real quick. And Tesla is down 1.93%. Now, this is a weekly chart. It's still under the Ichimoku cloud. Here it is on the daily chart inside. So no on Tesla. Apple, under the Tenkan Sen for 2 days in a row now, Monday and Tuesday, but holding above that 208.42. This might bounce. It's just kind of consolidating again, right? We're waiting for a bullish day maybe. And if we get a nice bullish day, some good news in the markets, that will do it. Here's a weekly chart. Problem is we're still under the cloud on the weekly. So that's a no-go for me. I did add Google to my portfolio. If you guys want to follow along, consider becoming a member. Folks, consider becoming a member. It's real easy to do that. Let me show you guys how you can access the stuff. You just basically, once you are on my page here, Blue Cloud Trading, you hit the subscribe button, and then a new little thing will pop up, the Subscribe Plus. You click on Subscribe Plus, okay? This little box will pop up. You can become a Blue Cloud supporter, Blue Cloud trader, or Blue Cloud legend level. There are different perks for each membership level. You can request a stock to be analyzed on the show if you become a Blue Cloud supporter. You can do that as a Blue Cloud trader as well, and also access the exclusive member-only videos. You can, and then in the next level, Blue Cloud legend level membership, you can do those things, as well as access day trading videos as well. And in addition to that, my daily trade updates, which I post not under the community tab, but there will be a new post next to the post section here. A new tab will pop up. It will say membership. This is where you'll find the daily posts. All right. And then if you scroll down on my page a little bit, this is where you'll find the member videos. Okay. And they're usually around an hour long. I go over my entire portfolio. I share 20 new stock ideas as well for each upcoming week. I go into more detail about the sectors, which sectors are looking the strongest. I give a little bit more insight about why I'm entering, why I'm closing out of positions. And so if you want more, you know, if you're looking for more information, if you want to see more content, this is the best way to do it. I also have a Patreon channel. So let me click that real quick. So if you go at the top here, if you click on 9 more links, and you scroll down a little bit, you can read a little bit about me. Scroll down. This is right here is a link for Patreon. And I have other videos there that are just exclusive to Patreon. So you can click on that and become a Patreon member. If you like the software, the trading software that I'm using, this software here, okay, it's great software. I love it. TC2000 is what it's called. You can get a $25 coupon through this affiliate link right here. All you do is click on it. It brings you to this page. You enter your email here. You can download it for Windows. I would recommend, now if you have a Mac, okay, I would recommend getting Parallels so that you can download it for the desktop version on your laptop. Now you can use the web-based version of TC2000. It might be a little slower, okay? So if you like the speed, all right, you want the desktop version. It's only on Windows technically, but you can access it on a web-based version too. So once you've entered your email, you'll see here, yes, I would like to receive the email, blah, blah, blah. You will receive $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading, as long as you haven't used the software in the last 12 months. That's the only key component. All right, and this is, you can find about pricing here. And I would recommend the gold membership here. All right. If you click on monthly, it's $30 a month. So you pay $5 out of pocket. This is the one I would recommend. So if you want to draw on the charts, this is the way to go. If you want access to alerts on your screen. So like, let's say that you wanted to put in an alert. Maybe I want to get an alert when Apple hits that 219.71 level. What would I do? I would right click on the actual horizontal line like so and just hit set alert. Okay. There it is. Apple crosses this line. That's the price. And then it can restart. I can restart this alert when it triggers the next day, an hour later, 15 minutes later, 5 minutes later, or a minute later if I want to. I can monitor that alert for up to 2 years, which is crazy. You can add a description here about, the specific reason why you've added that alert, so you don't forget about it. And yeah, then you can receive an email, you can receive a text message, it's up to you. You can set it up. You can edit the notification settings by clicking the edit button right there. And yeah, it will even have a pop-up on your laptop if you wanted to. Let's get back to the stocks now. These are the members' requests, okay? And like I said earlier, QS, guys, QuantumScape. This is a nice one. It's a very low-priced stock. It's at $10.85 a share, which means that it's going to have big moves. Today, for example, it was up 7.96%. This is a weekly chart that you're looking at. So for the last 2 weeks now, it's broken through the cloud, and it's in the beginning stages of taking off. Let's look at this chart. Let's look at the monthly chart on this one, QS. Okay. So the IPO was back in 2020, September of 2020. You can see it spiked up to this level of $134, okay, in like 4 months, which is insane. That's a crazy, crazy amount. And then it just systematically dropped. And so why is that? Well, number one, it's not a profitable company yet. It's in the beginning stages of it's a relatively new company. So you can see that it dropped approximately, let's see, let me measure that from that level down to these lows. It dropped about 97%. So it's a very risky type, this is a very risky type of trade, but it also has big rewards if it actually takes off even more. You can see the volume over here. 132 million shares traded today. I'm sorry, that week, during the week. Sorry, this is the daily chart. 85 million shares traded today. What's causing this? Why is it taking off like this? Right? You can see how it had that little pullback down to the Tengen-sen and then took off, and then just from this low over here, it's moved up 70%. And this is basically from July 2nd. All right, this month, it's up like that much. So remember, though, it's very risky, right? Because if it drops, it can have huge drops as well. So why is this stock doing so well? So all we need to do is let's do a little research about it. Let's take a look. Why QuantumScape stock jumped 68% in June? So they've got this new separator process. Cobra takes it closer to commercializing its EV battery technology. Okay, QuantumScape expects to start field testing and mass production of solid-state batteries in 2026. It's building solid-state lithium metal batteries for electric vehicles that are seemingly far better than the traditional lithium-ion batteries in terms of energy density, charging cost, and safety, among other things. QuantumScape has yet to commercialize its technology, but that hasn't deterred investors from piling into the stock at every hint of progress. In June, shares of QuantumScape jumped a whopping 68% according to data provided by S&P Global Market Intelligence. So, very interesting, right? Let's see what other things we can find from here. In June, for example, it met its primary 2025 goal by integrating the Cobra process into its baseline cell production to replace Raptor. Since Cobra is faster and more energy efficient, QuantumScape calls it a step change innovation in ceramic separator manufacturing and believes it should help it scale production faster. All right, so there you have it. And you can find out more about the news about this company in FinViz. Like if you use FinViz, you can type it in. There's a free version. I use the FinViz Elite, but there is a free version of this. So you just go into the search bar at the top and you type in QS, for example, and you can see a lot more articles about QuantumScape Corp. They also, of course, with FinViz Elite, I can also set up the Ichimoku in here. We can also look at the earnings announcements here. We can look at the earnings announcements. So you can see the last 2 earnings announcements were pretty positive. All right, you can see the revenue. Okay, 0. Well, they're green. It had a surprise earnings per share, right? Up 6.89, and over here, let's see here, it was up. It was actually negative, but it was up 0.61%. I guess it wasn't as bad as they expected, but anyway, for whatever reason, I think this company is doing pretty well here. There's only 800 employees in this company, but it is a $6 billion market cap. And there's the shares outstanding. They are increasing shares, diluting the company. Had a downgrade in April, but hasn't stopped it from moving up. Anyway, so this is where you'll find the news. If you're on this, like if you type in QS at the top and you just scroll down, you'll see all the news articles, and they go, they're all in by date. So today, 11:28 a.m. You can see all these different articles. All right, let's. There was one more stock, AAP, Advanced Auto Parts Inc. Let's look at the weekly chart on that one. So last week, it closed at 62.56, which was above the Senkou Span B, the purple line. It was above, it closed above it, but it was not conclusive. As I've said before, yes, sometimes price can break through the cloud, but if you don't have a conclusive type candle where it's like significantly above, I'd probably want to see it at least up at this level first. It has not been able to do that. And look at today. I mean, these last few days, it's kind of stuck in this little range here. It is still under the 200-day moving average, but since these bottoms here of May 9th, for example, it's AAP, Advanced Auto Parts, has moved up 92%. From $32.35 up to $62.40. So that's not bad. Of course, it's had highs back in 2022 of $245. The last time Advanced Auto Parts did really well was during the COVID crisis, when there weren't really that many, people were like buying more used vehicles or repairing their vehicles because there weren't as many, like new cars were more in demand and more expensive and everything else. And so it had a big jump of 236% in 1.8 years from April 3rd, 2020 to January 7th, 2022. Now, once we came out of the COVID crisis, though, it actually dropped approximately 87.25% in 3.3 years. This is primarily why I use Ichimoku, because it can keep you out of, you can see that it got under the Kijinsen, it got into the cloud, and then it was all over. Say goodnight, okay? And just now, it looks like it's starting to peak above the cloud. It's testing the waters. Here's a daily chart. All right. So on the daily chart, it looks pretty bullish, but we've got a few reversal candles. And right now, the profit margins are negative 3.74. If the tariffs are exorbitant, like over 10%, like for Mexico, which is expected, and there's a lot of auto manufacturing. Guess what? New vehicles are going to be very expensive, and there's not going to be as many deliveries in this country. Guess what's going to happen? Used car prices are going to go up. And as a result of used cars basically increasing, you're going to see people holding on to their cars longer. As a result, this company will benefit, in my opinion, from. It's unfortunate because nobody wants to not have that option of buying a new vehicle because they become so exorbitantly expensive potentially, or they'll have to buy, American cars only. They won't be able to buy the, foreign-made vehicles at the same prices as they used to. If, of course, the whole tariff situation goes into effect on August 1st, as it's possible. It's very possible. We don't know yet. So AAP would benefit in that scenario. It's too early to know what's going to happen, so I'd hold off actually on this one. And you can see the weekly chart is stalling right there too. maybe wait a little longer for AAP. That's what my recommendation. Guys, that's going to do it for this video. I hope you enjoyed it, learned a few things, and if you want to support the channel, please like, subscribe, share the video with someone that you think might be interested in it. You know, there are a lot of people that love trading, or they're interested in learning about trading, and you know, this channel is here to appeal to different groups, from beginners to intermediate to advanced. You're getting a different perspective about stocks and how to trade, and that's always a good thing. You know, I'm always looking for ideas and different ways, and looking at others as well for, you know, to get a better perspective about the markets. It's really important. All right, that's going to do it. Have a good one. I'll catch you all in the next video.